Brokers Digest, a webcast series by The Edge Singapore, discovering market opportunities with you. This episode is sponsored by Tiger Brokers.
Hello everyone and welcome back to another episode of The Edge Singapore's Brokers Digest. I'm Felicia Tan and today we will be talking about the Chinese tech sector and whether it is still worth investing in. Chinese tech, which seemed to be a promising sector amid the COVID-19 pandemic in 2020, have taken a shocking beating recently. The sector saw a widespread tumble in share prices after the Chinese government announced in July this year that it would be embarking on a 6-month campaign to clean up its tech sector. The country's biggest tech firms, including the Alibaba Group, JD.com, Didi Global, and Tencent, were all affected one way or another. According to several news reports in late July, Tencent's founder Pony Ma lost $14 billion or 18.9 billion Singapore dollars following the sell-off in Tencent's shares. Ma's loss surpassed that of Jack Ma, the founder of Alibaba Group and Ant Group, who lost $11 billion during the crackdown. The Chinese tech sector seemed like one with much potential. Yet with the recent sell-off, does this still hold true? Joining us today to give us more insights is Eng Tiam Chun, who is the CEO of Tiger Brokers Singapore. Hello, Tiam Chun. Welcome to the show.
Hi, thank you.
First of all, how has the recent regulations from the Chinese government affected listed Chinese companies in the US market?
Yeah, that's a hot topic for the market for the recent 1 month. So because of the actions of all these very sudden actions, actually the whole US market, especially in NASDAQ, is quite heavily or badly affected, especially for China tech stock. So all the China stock listed in US affected, as you note, and I believe this one is quite expected after that when we revisit the whole cases, is because a lot of all these China tech stock are listed in US market, and we all well known that US market is very volatile and the reaction from the investor is very fast and very aggressive. So all the investor, when they are not understand and suddenly have some news come out from the market, definitely some overreaction, maybe when they are over leveraging, and maybe some of the so-called investment in the related kind of industry or maybe company, investors tend to immediately react and overreact. So that's why we see all these change effect kind of thing happened during that when the news just come out. So we do see that some of the good company, even with the quality and also good financial background, is also affected. But as of now, after about 1 month, right, we do see that some of all these good company with the background, good background, have been recovering back. So this is the good news, which in the way that when all the investors start to digest well, right, and they see that hey, all these things, they might be affected a small group of the listed company from China to US, and actually for some of the listed company that already have been in listed in US market for long enough, actually there are so-called the regulations compliance kind of issue is pretty solid, and actually all this might not affect them in the long run. So we do see that some of the company that with a long listed history in US have been slowly recovering back. Actually the drop can be start from initial stage, maybe 20 to 30%, and some of them have been recovered back to now only like have a drop for 10%. So that's pretty good news for us. So talking about the Hong Kong market, actually stimulus thing happened to the Hong Kong market also, because actually the tech stock, I mean, these are the two main markets that the China's company will choose to be listed when they try to fund looking for funds for IPO. So actually Hong Kong market, we do see a lot of tech stock getting affected similarly. But I would say is that actually maybe because of the change effect is not so serious, and at the same time, maybe also called the policy, and people have more confidence on Hong Kong exchange kind of policy will not be so serious in a way. Since ultimately, I mean, the China's and Hong Kong is somehow related. So to the extent, actually, we do see that the drop compared in percentage in Hong Kong might not be as serious as the US side. But nevertheless, similar to US market, the so-called the market also again slowly recovering back, and we do see that similar things. Some of all these company back to like the percentage recovering up to only drop around maybe 10% or maybe 9% since on July 22nd that the news come out and it affect majority of the tech company in Hong Kong. So for this part, allow me to show you the slide so that you have a better view on how the changes, also called how the effect on some of the company, maybe I will chosen and selected. You will see the so-called the impact on them, and also all these company are just have a big drop during that period, and after that have some recovering back. Okay, let me bring you up some recap on the whole timeline. All right, so actually that happened actually in last year when the biggest and most expected IPO, all right, from Ant Group, which is everybody so excited that finally we see such a big project coming out and everybody really interested in investment on them. But just happened that when they're listed, going to be listed on November, they receive so-called instruction and advice from the exchange, from both China and Hong Kong exchange, to tell them that you need to cancel and put it on hold. So that's after that, the whole tech market start to so-called react from there. A lot of customers start to worry about what will be happening in the China regulators and what further policy might be coming out to affect the market. So from there, we wait. I mean, we see that by July, there's another round that affected a lot of the investor, which on July this year. So with the reasons of the market data, or sorry, the personal data, all right, is been then dangerous for some of the listed company who listed in US but yet carrying a lot of the China data, China resident data. So that's why China cybersecurity regulators announced on the investment in DDs and some of all these apps that have a lot of the captures, a lot of the retails, also called the residents kind of data. And nevertheless, at the same time, SEC also react. US SEC, Security and Exchange Commissions, also react on that to require more information declared and disclosed from the listed company from China's. So I think for this event, I will need to add on is that actually the whole regulator and the market see it as it is a risk control and risk concern, which previously maybe we underestimate political risk, and also the regulation risk change, how can affect a listed company in US. So this is the series of so-called what we see the market movement news for the last 1 month. So allow me to bring you to this slide to have a check or have a see on some of all these Chinese company in US and also Chinese company in Hong Kong. So we do see that roughly from the chart, actually they're having a similar patterns, which they're having a big growth thanks to the COVID-19 period, when a lot of the users have changed their habit into more digitalized. And enjoying for this benefit, a lot of the company can have maybe 2 times to 3 times kind of flow as high as. But when the when the Ant Group IPO regulation things happened, so we will see that actually they start to have a drop on all these charts. And since then, a lot of the tech stock and related to China's company tech stock all have a drop. And of course, the cases on last month, which is on July 22nd, which really affected all these companies, all of them have a big drop during that days because of the sudden news, and also they see how DD Group have been so-called been investigated. So, but luckily from this chart, I also see that for the last 20 over days, after some digestions and also reading on the market informations, seems like the confidence have been stable down, all right, from just rushing in to throw in. But a lot of all these share, you can see that some of the name which Sohu, which is a searching engine in China, doing some gaming business also, which Xiaomi is what we're familiar with. And of course, also NIO is the electronic vehicles kind of company. So taking closer look, let's say I use Sohu as an example, we do see that the gap have been recovering back to a certain extent. So this is certain level of good news for those so-called investors who are still confident on China's story and believe is technology will be leading us in the near futures. And actually China do have a lot of potential tech company. Maybe this is a good so-called time to revisit how strong is the background and how they're going to survive from more regulations, control, and monitoring. So next one, very quickly, also let you see through the Hong Kong market having a similar things, which I bring out some of the similar business nature kind of company for everyone to have a better view. So as big drop as 10 to 20%, which is 14% for Tencent. But by now, let's look at others company, which same thing, Xiaomi, BYD, and Kingsoft. Kingsoft is a software company, all right, who provide so-called similar to Microsoft Word or this Office. So BYD, as what is the name that we're familiar with, producing the electronic vehicle also. So we can see that majority of some of all these companies still having a very good story, and it will affect our so-called futures lifestyle one. Definitely, this is recovering back to a smaller gap, and that may bring us to a better ideas, or so-called restructures our investment, take this chance, our portfolio to redo something to rebalance our portfolio to some of the China tech stock with more potential.
So how has the policy from the US affected Chinese unicorns' plans to list in the US market?
We do see a big impact on that, because actually all the while for the last 5 years, actually China company, especially tech stock, Nasdaq is always the first choice for them to be listed there, because that's what the Nasdaq famous for the tech company get together in one places. And at the same time, of course, compared to US, Hong Kong, and others Asian kind of listed venue platform, right, other exchanges, US definitely is always the good choice because of the evaluations and also the investor in the market, which really give a good response in any of all these IPO. So that we see subsequently a lot of news come out to telling us that some of the plans on IPO have been put on hold and stopped, right? I mean, for Tiger Broker, we feel it more really seriously is because even some of the partner or some of the business so-called we are in the conversations is really putting on hold and reconsidering on the whole plan. So that is how we feel the policy really can have a big and long impact to the company who plan to list that. As I just now mentioned, because all this policy for China's kind of way of doing is coming too fast. And to be frank, a lot of all these new listed company, we will know how they were going to impact them when they get listed into the Nasdaq. So with that, actually, a lot of them rather maybe put on hold and maybe just delay for another 1 to 2 quarters in case anything that they can have a better and well preparation for it. So all this policy and control, we saw it actually is kind of more on the regulatory. So it is for sure that new policy will increase the cost and difficulty for some of all these new listed company, all right, and more time required when they're preparing on all these IPO projects. So that's how some of them start to have more consideration and maybe an hold back. And furthermore, I mean, all these different kind of reporting system, and also after that, there are some accounting system kind of different. It do impact some of all the China background kind of company when they might not be familiar with how to do all these so-called reporting accordingly. So that might be some of the impact we will see that it will long last for another maybe quarter in order for a lot of the IPO companies from China, all right, I mean the new unicorn, get familiar with this new policy and also react accordingly on that.
Okay. What about the recent crackdown by the Chinese government? Do you think it will affect investor sentiment towards the Chinese market?
Yes, that's for sure. All right. We know that always for China policy and China executions kind of determination is very fast. So investor is very affected by all these market negative news, and actually will tend to overreact on that. So now everybody is asking, hey, what will be the next? Will it be others tech company being affected? Or will it be only they are just so-called targeting for some of the big company, even though that they have mentioned, right? For company, for the policy is very clearly stated that for so-called that the company having a data more than 1 million user data one will need to do the necessary reporting and also some of the policy they need to follow. But still, I mean, when the policy change, it can be unexpected. So that's kind of the uncertainty and worry of the market. So in Tiger, we do see some of the investors start to hold back and also maybe start to reducing some of all these very so-called hot company, which due to the recently kind of COVID, everybody assuming and actually SDV is really looking good and tech stock will lead us to another new habit and new futures. So that's how we're observing that some of the investors very recent now looking at all these things and revisit it. And we see, I mean, of course, what we see that they start to maybe looking out for some other market to diversify their investment and so-called looking for other investment products. And looking at maybe some of them start to switching to Hong Kong and maybe Singapore market. At the same time, there's some of the big company which is definitely still very famous and supported by the investor, which like those names that you will be familiar with, Tesla, Motor, Apple, right, NIO. All this is some of the share that previously we do give out free for the customer also. So there are also some company with strong background, which we see that listed in Hong Kong market is getting attention by our investor, which I believe the impact in the Hong Kong market slightly not so serious. And at the same time, we still see all these big and strong background kind of company should have the potentials to recover when all these so-called negative news have been settled down and they have been doing the adjustment on their policy and control.
So when do you think the clampdown will stop and will more companies be investigated in China?
Yeah, actually, I would like to, personally, I look at the whole things. I would not see it as a bad thing to happen, which I don't use the crime down as the so-called the term to describe that. Actually, we do see that maybe a few years ago, Facebook also facing similar suit case in the US, right? So actually, all this is about controlling and so-called start to monitoring. When they initially, maybe even the regulator might not be familiar and might not be certain how strict and what is the level of restriction should be placed in order to allow all this industry to grow, but yet not going too well and out of control. So, but now, I mean, we see China doing it. So, with no difference on some, some others country when it comes to controlling some of the industry. But just that it will catch a surprise is, and actually to the extent, it might not say as a surprise because we all know China when they're implementing policy is so fast and so immediate and determination is there. And especially when they're even looking at the biggest company having the biggest impact on that. So that's why we've been suddenly been alert. Okay, this kind of control can really have impact to a lot of the similar company. So do all these initial, I saw it as a good purpose. From personal view, I see it as actually all these actions after for the quarter to two quarter, after all these policy been settled down, and some of the company have been adopting on that. Actually, that give a guideline and direction for all these listed company, a good direction to lead them to how to survive for longer, and also the business can be extended to others region or other so-called others area. Because only when we've control and with some of the certain level of guideline from the rule and regulations, so that you will not worry that maybe, hey, next time we're stepping on somewhere on the gray area, because now a lot of things have been listed down. You're not worried that the new business come out. Will it be one day that have some questions from the authority? Because now you have a guideline to follow and prepare for your internal policy and all this. So I would see that potentially. So others company might start to see some of them, other company in the tech sectors might start to receiving similar kind of concern and also revisit on their own internal policy. But all these things happen should be good, and we see in long run those who can survive and also sustain for this kind of movement and changes should be those companies that might worth us more to invest on them.
So actually, given the current situation and with the regulations, do you think Chinese technology companies will ever reach the same level of investor confidence that we saw earlier in the year?
That is the good question. Frankly speaking, I think that will be hard because retail investors once get bite, they have twice slice. So to them, in a way that now a lot of the customer already start to asking us that, hey, will it be impact on this? And even some of them they start to worry about some of the ETF because of the component on the tech stock is quite heavy. Be it whether they are the leading company representing China, or be it they are the tech stock ETF. So that confidence level, to be frank, will need another half a year to really build back. When actually also one reason is nowadays with internet and also a lot of market available in the digital platforms for investor to invest. Investor with more choice now. So for them, they start to rebalance the whole portfolio, starting for looking at some others industrial. So that can be in areas that we will see that the tech stock areas might not be so easily recovering back. It will slowly take time for them to build back the confidence in the investor. Then also with some of the new development, I'm not sure, maybe some of the so-called new models and also new service bring out to the investor. Then they can bring the good so-called story to the East investor and also Western investor. So now we can see a lot of investors slow down and restructuring their portfolio. As I mentioned, some of the names just now, they just adjust the percentage in all these different kind of tech, but in a way that different area of tech kind of company, which I believe those area, those company will still give a good growth and big growth on that because of their own so-called patent and also copyright on their technologies and skill.
So do you think the current share price levels actually represent a buying opportunity into the sector?
I think for these questions, but everybody better be more cautious and more conservative. I always say that Asian investor always more conservative compared to maybe US and maybe some other markets. To me, I see this that this so-called thing happened will eliminate some of the so-called the noises and also overvalue in the market and volatility from the speculator, because when the market hot, we will see a lot of speculator taking the advantage and also push up the price and all this. But is it a good time to buy? I would say is that we never see in the market so-called to try to buy at the bottom. Right, that is not really a wise advice to the retail investor, because retail investor compared to the full-time and also the professional investor in the corporate, we always have our limitations. So for us, I would say is that it is a good time to look at it and revisit your portfolio and looking at some of the data from all these China tech stock, especially those with a strong history and also listed for years, proven that for the years they are so-called the business is really sustainable even before COVID and after COVID, all right, during the 2020. So all these companies, they have a strong solid background and believe, as I say, so once they really get through and get their so-called the professional team to advise them correctly on how to handle all this policy, so that will be the good time for them to gain back the confidence, and also we will see the market supporting them again. So now should be the good time to revisit, restudy, and pick the right stock instead of rushing in and buying at the bottom.
We do have one last question. So people are optimistic on China's growth. What are your thoughts on this? And has all this positivity been priced in? And are there any contrarian views to provide some food for thought for investors?
Actually, to me, China's story, you still have a lot of story to tell to the investor and to the market. Ultimately, they are the biggest population and also the growing fastest, no matter in the population, technology, or even in some of the lifestyle spending kind of patterns. So with this, they have the ultimate advantage, right, on compared to some others market, which we already passed through those so-called growing periods. So for this, I would see that actually China market is still the market that worth for us to pay attention to, not too restricted to a certain market, maybe due to COVID, everybody talking about IT technology. But in fact, actually tech company is a very big so-called terms to the market. In this way, I mean, like recently affected one is those tech company with the app, all right, handful of app, and also maybe collecting a lot of registration user, which the business model is more or less similar if you can realize. But looking at some other models that previously I show you in the slide. So let's say, for example, electronic vehicle and some of the console computer, Internet of the thing, right? Some of all these software we are using, right? Zoom might not be China's, but actually we did see the legendary of how Zoom that really grow. Similar kind of industry is also available in the China market, and of course for them they have an advantage that even they might not even expand out to the world market, to the world. Even the internally consumptions can sustain them for the certain growth. So similar thing for some others, like let's say mobile, and also some of the technologies on crowding computer and maybe big data analysis software. So all these I would suggest is another area which the investor should be paying attention to and looking at how they can grab the opportunity among them.
Thank you very much, Tiam Chun, for your insights. That is unfortunately all the time that we have today. Like us on Facebook and Instagram so you can be alerted to upcoming episodes. You can also leave us a comment below if there are any questions or topics you would like for us to discuss. Once again, I'm Felicia Tan. With me is Tiam Chun, the CEO of Tiger Brokers Singapore. Goodbye.